After 2 weeks off, we've come back to have a look at Gary Glover's portfolio and his weekly report. Last time we left off, he was looking at commodities, assessing the momentum and the questionable movement of some of those that were leading the momentum side of things. Here we are, we're getting a check-up on the indices, where the markets are, where he thinks they might be going, and the companies that are catching his eye and his portfolio investment now. Good morning, Gary. How are you?
On breakfast.
So we've had some time off, and looking at the portfolio, looking at the market, we see that the market has started to pair off a bit. It fits in line with sort of some of the forecasting we're looking at, saying that it doesn't seem like it's going to be super easy. Looks like it might be messy. That may be transpiring. We'll let you comment on that. And then also the components of the market. So throwing all of that at you, which one would you like to tackle first?
Look, there's a few things going on. Obviously, we talked about, the commodity prices have been so strong here the last month here, really, Chris. So that's really been the leading, for me, kind of, showing relative strength. And, the fact that the inflation numbers have been, we've gone from 0.6 to 0.8 to 1% the last 3 quarters there. So that's not heading in the right direction for Australia. So can't see how we're going to avoid a rate hike there. So that potentially can have a bit of a negative outcome for equities and stuff there. But to do like commodity space, I'm pretty much long. Like I'm never really big commodities guy. They're not, don't usually trade too heavy there. But I just see the sectors just showing real strength there. Some really good base building characteristics there. I think I've just added to my IGO here just today here on that ephemeral report there. So so I think that's definitely an area that's definitely showing up there. But as we talked about there, Chris, is that commodities being pretty buoyant is not, that's a sort of it's like the market, like market's often ahead of the economy, so like so there's a very common phrase here that stock market sort of usually acts about 6 months ahead of the actual economy there. And you can see here that commodities are pretty buoyant there. And the whole basket, you think about it, if the basket has gone up, say, 10% on the last year, that's going to put a lot of inflationary pressures on cost of goods for everything. So that commodities have been telling us for a while here now that the costs are going up. Cost of goods there. I mean, things like, I think cocoa's up 300% for the year. Just even some of the softs and hards there. So that should be a concern for inflation here. So that's probably going to maybe keep a little bit of a quell on markets there. But the same token there, can't get too negative equities as well, because we know high inflationary environments that, we know energy stocks did well, precious metals did well, commodities did well. Even value shares did pretty well. In those high inflationary periods of the past. So people tend to pay up a bit more for the yield. And that probably explains why CBA is trading on 21 times earnings and the yield's only 3.8, because people are paying more for that yield, even though it's pretty low here at the moment. So, I noticed like Sonic, I probably get off topic here, but Sonic's on about 20 times and the yield's over 4%. So it's probably got a better yield and a better PE now than CBA. Sonic's got a better growth, like 25, 26 forecast to grow as well. But CBA's got no growth. So, so it's interesting dynamics in the market there, but it does explain a bit what's happening here at the moment.
Well, that's a good backdrop and a good filling in for the last couple of weeks to sort of extend on the conversations that we've had. If we look at the NASDAQ, we can see that they've had that significant drop on the weekly chart, that massive bearish candle, and then somewhat of a rally since then in the week afterwards, but nowhere near to the magnitude of the drop. Is this kind of that messy period that you were talking about we may be coming into and move towards to the middle of the year?
Yeah, look, I guess we take a logical approach there, and that's what I hopefully do try and bring to these reports, whereas most of the economists in this country are acting illogical. But if it this is election year, so this is normally a pretty bullish year. We normally get a bit of a cool off around that mid-year. There's definitely a lot of May and June lows in the election years. So I still think this is still a positive cycle towards the end of this year. So we do need a breather at some point, Chris, in this trend here. So if we understand like trends in the past, is that, you know, normally if it's just normally like a pullback in the trend, pullbacks are often uniform. So what I mean by uniform is that they're often similar in size to the past. So if we look at that sort of August to sort of October correction in the past there, that should sort of give us some guide to what this, you know, this is the start of another corrective process here now. That should give us a bit of a guide as to what to expect there. So I think the first correction off the low was very similar to the second correction there. So if you look at so we've got the October low, then we pull back into December. That low into December was probably the same size as the next low into March. So the pullback was, yeah. So nice and uniform, okay? So, and then we're looking now, this pullback into October low, we're looking for sort of something uniform to that as well. So this is a market, oftentimes is sort of, you know, this is the one thing McLaren talked about years ago, is that oftentimes, you know, in a bull trend there, the pullbacks will be, you know, modest, and they'll be consistent, and they'll be sort of uniform, and then eventually they'll tip over, and that's what we talk about, the trend rolling over, or what I refer to as an overbalance of the trend. So I don't think this trend has come to an end here. I know some people are getting pretty bearish here, but history says not to get too bearish there. And the cycle is still pretty positive toward the end of the year, but we're just looking for something uniform there. So far, the first leg down is almost exactly the same as the first leg down in August. So around that 8.5%. So nice uniform there. So looking for a bit of a bounce there for a few weeks up to the top of that band, and then come off here. So that's why I sort of think it'll be sort of uniform, be pretty similar. So, and I mean, ideal, the perfect setup would be to come back, sit on top of that previous high, and then, or near that, maybe leave a tiny little gap in there, but come back near that, and then build it in there for the rest of the year, and then run up into the, you know, end of 24 here. So, few cycles that have sort of got early 25 as a bit of a major, a top to watch out for. So that would be a nice little fit there if we got something like that. So far so good. Just probably want to see, market rally a little bit further here. Got some interesting cycles actually on the next chart there, Chris, too, which I'm sort of watching there. I don't know if I think I've taken a few of them off there, but there is a sort of 41 week cycle, which has been bang on the money here for quite a few revolutions here. Similar to I think there's a 41-month cycle as well, which is a really interesting one. People are sort of studying any sort of GAN and stuff there. But that 41 cycle's been running for like 100 years, and it's a cracking. I think it's like 182 weeks, 41 months, something like that. So it's a cracking cycle as well. It's really been on the money there. And that's kind of calling for that early 25 high here. But this one here just tells us here that we could have an important cycle in the next or next week. So maybe we can run up a little bit into a bit of a minor high there next week. I thought the way it was coming off, I thought could have just aggressively sold into it, but yeah, it doesn't look like the case. It's like we're sort of bouncing here. So but yeah, we'll watch that anyway and see what happens there next week.
Well, that's an interesting cycle, and probably a whole topic of conversation in itself of those different cycles and histories of them. But if we move from the S&P 500, that weekly chart, you've got sort of the extension of that high, and then the drop that we've had the last couple of weeks, and then the smaller rally as you're just talking about now. If we take our attention to the Aussie, the XJO, the top 200, it's been in the sense that we haven't been running anywhere near as fast. We haven't hit back. But I think this is sort of what you were alluding to before. This high that was resistance multiple times before, you're sort of aiming for that to possibly be where we'd fall back to. Is that what's unfolding here with the Aussie? Is that coming to plan in that sense?
Yeah, look, I think you're spot on there, Chris. I mean, it has been a disconnect. It hasn't really been as strong as US equities. and also it hasn't been as weak on the pullbacks as well. So we've been a bit of a laggard there in terms of, like, I think a Nikkei broke out first. So I think the Nasdaq, Nasdaq, like the Dow broke out second there. But yeah, so we've been definitely a laggard there. But this might be a bit messy there. But the one thing we have been doing is sort of, is bouncing back, but in a choppy manner. But we are sort of respecting the levels. So if you look at the highs and lows there, we are sort of we're definitely sort of, hitting resistance at some of these old highs and bouncing off some of these old lows. I mean, that last low there in early Knob 23, that just came back to the previous sort of 22 low there, like bang on it. It's a bit of a key level as well there. That's where it sort of bounced from there. So above that, come back on top of the previous high, back here. So I just think probably, it's not as clear market there, but probably just watch what it's doing as it approaches some of those sort of key old technical levels there. So I sort of think 7,400 is probably, I think there's a little bit of weakness there, but you can see the volumes have tapered off as well. So we're not, we saw maybe one little week of a slightly aggressive selling, but hardly large compared to the previous week. So it's not super aggressive selling at all for the market there. And I think maybe that's, the fact that commodities are so buoyant here, is probably holding properly the market up here as well. We are definitely a resource-laden market.
Well, that's definitely how the world sees Australia as well, almost a proxy for China, but a proxy for risk on when we look at the commodity movements. The Dow Jones, you mentioned from the breakout scenario, was an earlier one to break out. Definitely broke out a lot more than the Australian market did. This is where we sort of surpassed the previous highs, shot through it, and then you've got some of these trends where it was slowing down to where it is now. Yeah. Is there any further interpretation to what's happening in the Dow here and how you see that unfolding?
Yeah, look, obviously the most common pullback is to have just like a three-wave pullback like we had in that August period previously. So we're looking for like a little ABC. That's the textbook. That's the most common there. It doesn't always work that way. Sometimes it can just have a pullback and then bounce, but a little three-wave pullback is the most uniform one there. This is probably the most clear corrective so far, because that's pretty impulsive down on the Dow, and now we've already got this little sideways orientation. So we've sort of got that classic sidewaysy sort of like a little bit of a bear flag sort of look here. So if we get a couple of weeks here of sort of going up, but without really kicking on, just sort of hanging on there, get a little bear flag, I should say, that will infer another leg down here. And the ideal setup would be to come back and sit on top of that old high as well. So look, doesn't always work out perfectly, but so far looks pretty interesting. Looks fairly textbooky in terms of the way it's come off impulsive, bounce so far corrective. So another couple of weeks of just sort of going marginally higher without really going too much higher would be a good setup.
Well, if we move from the indices and the updates that you've given us there, we stay in that commodity focus, and you've got IGO. Looking at the daily chart here, it shows that long drawn out fall as it sort of rounds out. And then if we zero in, you've got sort of that wedge showing, but even to the pointy end of that wedge, you've got 0, 1, 2, 3.
Yeah.
We've got something over here. What's happening over here?
Yeah, so I love this 0, 1, 2, 3 pattern. I'm sort of starting to fall more in love with it as time pushes on here. But what it does is just sort of suggests that, it takes a little bit of time to sort of build here, particularly if you've had, some of these, like the IGO and the S32, have had some really aggressive downward trends there. So you can't just sort of, find a low and then reverse straight back up again. They got to build after sort of coming off here. So what I like about the IGO here is that we've seen, I think S32 did a little, smaller 0, 1, 2, 3 pattern, and then sort of exploded out of it, so which is pretty positive there. Similar sort of sector. IGO is a much bigger base here. So we've got our low, first high low, second high low, now third high low. And just the last couple of weeks there, Chris, sort of going down there. That's a really corrective, decline here. No volume in there, so not aggressive selling at all. So this is sort of, to me, it's sort of struggling, even though we've been in a pretty nasty downtrend, struggling to go down now for the first time. And taking a long time to move lower here. So that's kind of a building sort of base for me. So this is sort of how these bases get built. Stan Wine says, Sam Weinstein talks about, the longer the base, the larger the break here. So, so I really like this there. So, breaking above that sort of, if you look at that chart too, Chris, we've got our BCP in there as well. So we've got our little, from 24 sort of high into the low, quite a large leak down. And we've sort of got our March into April a little bit tighter again. And then the last little pullback is not nice and tight again. So it'll be nice to sort of get above the 50-day moving average and break above that that lower high there. So I'm looking for a break above 771, which has happened today. I've got prepared to buy a couple cents higher there to get filled. Done. And I've added to my position here. So oftentimes these bases there take a little while to build, but breaking above the first lower high there, or breaking above breaking above a lower high is a good sign there. So I think this looks pretty good here. So to me, commodities is the main game here. This is the sort of sector I'm looking at there. So in a market which is looking maybe a bit soggy, a bit caught here. I'll be looking at that. If you notice one thing, I talked about it earlier, Chris, is that I've noticed that a lot of the growth names that have been flying have been reporting well in the last couple of weeks and not going on with it. So I think 360 was a good example there. It's been probably one of the leading growth names. It reported gave an upgrade there a couple of weeks ago. It did gap up, but then it just sold off into that good news. The next day, sold off again, that good news, and it could go on with it. It's held on, but it had, like in the past, that good news would have been that game-changing news, that really upgrade, would have caused the stock to gap up and keep running. But we started to see a bit of something. I think MP1 the last couple of days as well had a good update, and again a bit of selling coming in. So just seeing quite a few growth names starting to, that's a change of character. If you listen to a lot of trading podcasts, you listen to stock market wizards and stuff there in the past, they sort of say, how the market reacts to good and bad news is tells you how strong or healthy a sort of sector is at the moment. So we're just seeing a lot of the growth names not be able to kick on with good news. So that's a bit of a change of character to me. So that's telling me to be wary of that sector. That's sort of why I've been probably staying away from some of those. So there's some good looking charts out there, but they're in the wrong sector, and that right sector to me is commodities at the moment. They're moving quite nicely. So I'm just trying to stay in the right areas, and try and respect the rules of the market here as well.
Well, that's a nice delineation of your analysis. You're seeing the charts, you're seeing that they make the growth companies, they have good tailwinds behind them, but something's not quite right in how they're behaving. Calix, CXL is one that you've got in this week's report. Still in that downward trend side of things. And you've got the environmental group sound sexy, we're looking for greener solutions. But what's happening here, and why is it making the cull into this week's report?
Yeah, it's been on my sort of watch list for probably quite some time here because of that big descending wedge there. So it's quite a pronounced pattern there. So it's been going on for it's almost close to 2 years now. So we don't see. I think Flight Center made one was about 18 months long. It's like their descending wedge, and then broke out and got going here. So, but let's just interesting that it is sort of a descending wedge. But it has broken down the bottom. And now people think, that's a bit of a bad sign there. But I noticed that overshoot and then reverse back, that's up to where it can change here. But the volumes are up as well, Chris, as well. So definitely seeing an escalation in volumes. And that can be a sign of accumulation there. But, so the question is this thing broken? If not, then maybe, So I did have a look at this actually. And, when I first thought, I actually thought it was something else. I thought it was an industry which was broken, but then had a closer look at it and realised that it's sort of one of those companies there that's sort of in an interesting area. It's sort of growing its revenues, but it's running at a loss there. Doesn't seem to be, the balance sheet seems to be pretty solid, so I'm always wary of a weak balance sheet having to raise money. That's kind of oftentimes why the sort of stocks get nailed down on the knees like this. I can't sort of see that here. But At the end of the day, it is a pretty mean looking downtrend there. Probably, as much as it's sort of starting to look interesting, probably want to wait for a bit of a catalyst there to be joining in here, because we are looking at sort of something which is a bit weak there. Much that's in that sort of green area, still operating at a loss there. We sort of noticed there with like 0 and 360 there. Once they got close to break even, Chris, and turn the revenue line into start to making some earnings, that was a real changing catalyst for those stocks, and then they really started to run here. So this is probably just one to keep an eye on there. It's sort of still it looks too far away from that point, but maybe if it starts getting close to that point, and it starts talking about getting close to that point there, that it's definitely a stock that could change there. But yeah, just wanted to watch here for the moment. Probably it's important not to just jump in and buy these things here. I think it's important to wait for the right sort of catalyst there for a change.
Well, that's an interesting one, and keep on the watch list and keep watching how that unfolds. Jumbo Interactive, this one has been on your watch list for a while. You have discussed it a few times, and could this be sort of one of those, could it be a bullish flag, or is that not the right context and the right market for us to see that?
Yeah, I think it is a bullish flag. I mean, it's had a pretty good run there, pretty impulsive, and that's on much stronger volumes, Chris, and pulled back on lighter volumes. So technically, it looks really good. You'd probably like to see that pullback be a little less impulsive to the downside, but more sideways. It'd be probably better, but it's still sort of a constructive there. The only thing for me, the only reason I haven't pulled the trigger on there is because the growth stocks aren't performing well here. So the market's telling me this is not a leading sector here. So if I saw this chart in a commodities, then I'll be all over it. But it's in a sector there that's actually showing weakness there. So, Stan sort of keep referring to Stan Weinstein here. But it's just some great lessons there that sort of in my head here the last few weeks. There's that you get equal chart. A different sector, like a strong sector there, you can get like a 30 to 70% move. In a weak sector, you might only get a 5 to 15% move. So you just might, it's just important there to be sort of in a sector which is sort of under some weakness there. Just may not get the same sort of move here. So looks pretty good, just not in the right sort of segment there. That doesn't mean, if we see a bit more support come in here, stabilize there, and I might look at a small position there, and definitely won't be going overweight in that area.
Right. Well, another one that we watched a fair few times is John Lyng Group, JLG. Back towards this support line here that's long-standing, going to the far left of the chart for the dawn of time for this particular snapshot of the chart. And then it's coinciding with this channel that you'd had highlighted before. So a bit of a confluence there of what's happening. What do you...
Yeah, it's another one just to sort of keep a close eye on here, sort of watch there. I don't think we want to be sort of jumping in here too quickly, but it is at a bit of a critical junction there for the stock here. And that is a bit of that's a sideways orientated move for it. So it's a corrective sort of sideways trend there. So it's not sort of showing too much. I mean, it did have that breakout previously out of that sideways orientation, and then it had a bit of a run there. So that was probably the first positive there. So now we've come back to retest that break zone, which often does come back here, but we want to see some strength there come back in again. So, the volume's a little mixed there. There's some probably heavier days in there. That can be negative or positive there. So, but yeah, probably more. This is probably one just to be watching here over the next week or two. Definitely sort of needs to sort of hold this 550 sort of region there, I think. So, critical level there, I think, for the stock here.
Right. Well, the last one to look in this week's report, Audinate AD8, has been a phenomenal growth, and you've got here highlighted a few things which I think I'm going to guess you're going to give us a couple of lessons on, because there's a few gems here on the chart. So I'll hand the reins over to you and talk us through what's happening on this chart.
Yeah, I mean, look, it's a very strong chart. Yeah, obviously, similar to sort of some of the. I think sort of 0, 360, MP1 there made sort of similar setups there. That cup and handle was, I think, couple of those, not all of them set up cup and handle, but a couple of them set up this cup and handle there, which is definitely a pattern that you see in the stronger momentum in these growth names. So definitely want to be watching that pattern consistently there. So we did definitely got a cup and handle there, which is a nice bullish sort of setup there for a growth stock. And then we did get the gap up as well, which is kind of like, like when we see a strong stock like this have that sort of gap up in good news and then run there, that's kind of a bit of a game changer trade for me. So it does sort of often lead the stock to sort of greater gains. And we've seen that with 360, seen that with Zero, seen it with, I think MP1's had like 3 game changes, like gap up on good news and stuff there. So can follow those news there. So some good signs there, but the stock has had a pretty good run here. So you might be thinking, still looks a bit long on the tooth there. But the last pullback, as much as there's a bit of, probably a bit more volume in there than you'd want to see, still sitting on top of the old high crest. It's still in a strong position there. And our trend sort of like this, we built the first base there off the cup and handle low. This next trend is sort of running at a slightly higher extent here. This now pullback there is probably at an even more extent there. So McLaren talks about this being a blow-off trend, being aggressive. Once you sort of get your third trend line there, this potentially can be aggressive there. So this is definitely one to watch here on the upside, because this trend is still accelerating there, still sitting on top of the previous high. Look, if it closed below that, closed below 18 there, I guess on the weekly, or closed below that previous high there, then I definitely be out. But this is a pretty strong looking trend here. So, and we know, you and I, we all too well in knowing that these sort of, stocks that show relative strength and these leaders, they run for a lot further than most people anticipate there. So this is definitely one that looks pretty interesting. It's probably not the right sector here, but yeah, it's probably one I'm watching pretty close as well, just because it had some terrific growth there. And just because it hit that third accelerating trend line, this is sort of potentially, this is potentially a blow-off trend here for what McLaren would describe as a blow-off trend here. So yeah, definitely want to keep an eye on there. If the market hasn't sort of found, the market's just, I still think it might be a little three-way pullback here, but if there's not, if the market's just had that little pullback to 8.5% here and then it starts to build again, this thing could really wind up here. So yeah, just definitely one that looks pretty interesting to me.
Well, that's a nice growth one to end on. It's not saying buy right now, but it is staying at the top of your short list, because if market conditions do favour that for this company to continue and put on its next leg, you're saying it's sort of primed in that momentum and leading company. So a good one to watch, and a good analysis of the markets overall. So any gems you want to leave us with, or we say we'll come back and look at the momentum companies on Friday?
No, there's I think there's I've left a few little gems there. I did notice that Trade Align have put out the model book for 2023. So basically what that is a book with all the best stocks for the year, and it outlines all the patterns and breaks and movements, and it's a really good study tool. So you're literally looking at the stronger stocks, how they set up, how they break out, what they look for. Just a good reminder of sort of what we should be looking for. We want to be following strongest names. And some good lessons in there as to, I might see if I might be able to forward a link on my Twitter handle there, actually. So see if I can forward a link there, but you can go to Trade Align and download it for free. You just have to give you an email address. But it is, it's definitely worth going. I've got all the model books there. I've got the RBD model books. It's just really important to, all the great traders, they talk about studying those stronger names and going back over those stronger names. That's just a really good lesson. It's probably sort of something we should do every quarter, Chris, is maybe try and pull out one of the strongest names and then just sort of study that chart and see what we can learn from it and then cover it. I think it's a really good tool there. Yeah, because that cup and handle, that's what we're looking for. So that sets up probably half the growth names. We'll probably do that formation, and the other half will be sort of something slightly different.
Well, as you brought this chart up, I looked at that and thought of the book that you gave me a few years ago that we got printed out, and we've both got physical copies to review. And that pattern there followed by a massive run like we've just had to the right that you've just described. It's so incredibly common, whether it's from the 50s, 60s, 70s, 80s, 90s. It's just repeats itself over and over and over. And I completely agree with you. We go back through, analyze the market leaders, really imprint that in our brains and our retina what that pattern, what that setup looks like. So we're consistently looking for that in the markets for our own trades. So this chart here it's possibly one way of dissecting that and seeing where the opportunities are is a great task. So
maybe we could do a show there, Chris, where we look at the top 10 performers for the year and we go through and recover them. That'd be a good little session.
There we go. Well, if people want to see that, they can comment and give us a bit of a show of votes and support below if that would see us put our time towards that. So to that point, I know, Gary, you're also preparing for a presentation that you're doing very soon. So you've got a bit of homework on your plate right there. But we do say thank you very much for taking your time, sharing these reports, sharing your analysis of the markets, and also helping us become better traders ourselves. So thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Gary's mentioned all of those setups. We have set a whole playlist to the right-hand side, and that's where you can look at those in more detail, like the 0, 1, 2, 3, and so forth. And then the momentum companies that we look at every Friday, where we go through the top 30 momentum companies and the top 30 launchpad companies. Gary pulls out his favorite charts and shares with us lessons like we've just had today. And he's mentioned his Twitter handle or his X, which is over there on the left, and you can follow him there and possibly find that link that he's talking about today.